Welcome everyone to Vested Interest. This is Shane, back for a stock pick of the day video. We are going to take a look at one out of the financial sector, Charles Schwab. It is July 16th, Tuesday, and this is one you're probably very familiar with, or should be very familiar with if you are an investor. Charles Schwab is the brokerage account a lot of people use, and SCHD is one of the products that they offer. I invest in it. If you've been watching my channel for any length of time, or at least the last year, you know I invest in SCHD, which is a dividend growth ETF that is offered by Charles Schwab. So let's jump into the video and see if this one meets the criteria for investment, or at least passes our screener. So if you are new to the channel, or you have just not done so already, go ahead and help me continue to grow the channel. We are over 1,000 subscribers now, so really appreciate everyone who has taken the time to do so. And then again, for those of you who may be new or just haven't taken the time, over half of you out there are not subscribed to the channel. So do me a favor and hit that thumbs up button down below if you find any value in the content. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that subscribe button down below. Join us on this journey to financial freedom. Make sure you're notified whenever we put out any new content. I do video suggestions. So if you have a company like Charles Schwab you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down in the comment section below, and make sure that notification bell is rung so that you can be notified whenever we put out that video. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in investing. Now, just because it meets 5 of 8, in this case, we will look at price to book, 6 of 9. It does not mean I'm investing in the company. It just means it makes it past my initial screener and onto my watch list. Then I do more of a deep dive into the financials, into the balance sheet, the income statement. I'm looking at things like debt to equity ratios, assets over liabilities. Are they paying down debt over time? Are they buying back shares, or are they putting more shares into the market? What do their margins look like? Are they growing over time, or are they decreasing? Is their revenue growing? Are their sales growing? All of those metrics and more you should look at if you are investing in individual companies. And if you don't want to do that type of deep dive into the company, you should be investing into ETFs, something like an S&P 500 index fund or ETF, like VU, which is the Vanguard ETF. I believe Charles Schwab has an S&P. SPY, SPY, I believe, is theirs. So anything that matches the S&P 500 is what Warren Buffett has recommended for years. And he once famously won a bet investing against somebody, saying that he could take the S&P 500 and they could pick any company that they wanted, or companies that they wanted, and he would beat them. And ultimately he did. So if you were going by what Warren Buffett wanted you to invest in, and I think what he holds in his portfolio, you could go check out his 13F and see for yourself. But I'm pretty sure it's VOO, again, the Vanguard S&P 500 ETF, and SPY, SPY. So again, we're going to look at this screener here at the end and see if it meets 6 of 9, since we're going to take a look at price to book, since this is it's not a bank. It is a brokerage account or brokerage company, but they act a lot like a bank, and they do have banking. So let's go back over to the company here, overview, and check them out at their homepage, www.schwab.com. That is www.schwab.com. That is their homepage where I pulled this information from, except for this little snippet, which I got off of stockanalysis.com. The Charles Schwab Corporation, together with its subsidiaries, operates as a savings and loan holding company that provides wealth management, securities, brokerage, banking, asset management, custody, and financial advisory services in the United States and internationally. So if you're looking for a brokerage account, this might be one to take a look at as well, and go check them out at Schwab, where you can open up a bank savings account as well as a brokerage account. And you can see here some of the products that they offer: brokerage and trading, retirement accounts, IRAs, education and custodial accounts. I have 2 custodial accounts through my bank, Ally Financial. Those are accounts for children, yours or someone else's. So if you're an uncle or an aunt or a grandfather or grandmother, you don't have to. It doesn't have to be your child specifically. It can be someone else's child, even a non-relative, I believe, so long as it's in an adult's name and the child's name. Personal choice retirement, small business accounts by financial goal, trading accounts, investment products, mutual funds, ETFs, stocks, options, futures, bonds, CDs, and fixed incomes, money market funds, cash solutions and rates, annuities, cryptocurrency even, banking and borrowing. So here's their banking segment: banking offerings, checking, savings, home loans and rates, strategic borrowing, credit cards. I'm assuming that's personal loans as well as small business loans, and featured offers. Schwab investing themes, Schwab starter kit, Schwab stock slices, Schwab personalized indexing, generating retirement income, tax efficient investing, Schwab personal trust services. So if you're looking for a trust, actually my wife and I are talking about getting a trust for our children. So this might be a place that we go look at for that. But again, they are not only a bank, but also a brokerage and trading service as well. Now, the reason we are taking a look at them, down 10.18% on the day, huge drop on the day. You can see it just dropped off a cliff today, which is strange because the rest of the market seems to be up all over the place. I think I only had one position out of the 30 plus positions in my portfolio that was down today. Everything else was in the green. And Bank of America, another bank, was up significantly over 5%. We are talking about the Charles Schwab Corporation, ticker SCHW. Closed out the day at $67.43. 52-week range as low as $48.66, as high as $79.49. So they are closer to their 52-week high than their 52-week low, and maybe that's what it is. Maybe some people are taking profits here with them closer to their 52-week high. Just strange. Huge drop on the day nonetheless. Looks like they're up a little bit in the after hours. Market cap of $123.274 billion. A beta of 0.99, so they are slightly, just ever so slightly less volatile than the overall market. Their PE ratio, $28.21 per share. EPS sitting at 2.39, $2.39 per share. They did have an earning. Well, maybe that's what it is. They did have an earnings date today, so maybe check out their earnings and see what's going on there. Maybe their earnings is down. Maybe some people are sitting out of the market right now. I'm not sure what's going on, but they did post an earnings today. Forward dividend is $1. Divide by 4 because they are a quarterly payer. Low starting dividend yield on this one, 1.33%. Ex-dividend date was May 9th. They paid out May 24th. So you would be in line for the next dividend, though you'll have to wait a couple months to get it. 1 year target estimate, at least according to Yahoo Finance, they see them going back up and setting a new 52-week high, $79.67 per share. So they do see some upside as far as price appreciation in the stock price. Now we're going to jump over to dividend yield theory to see if this one is potentially showing any value. To do that, we look at their 5-year dividend yield average of 1.38%. We compare it to its current 1.33, or over here where it says forward 1.33. And since it is lower, that actually speaks to a little bit of overvaluation on this one. Payout ratio is low at 41.84%. I like 75% or less. Now let's look at price to book before we look over at free cash flow. Price to book. Again, typically for banks is fair value. Anything under 1, undervalued. Anything over 1, overvalued. Their current price to book is sitting at 4.13, so it speaks to a bit of overvaluation as well. And if you look at them over the last year or so, you can see that they were definitely cheaper at times according to price to book. That's another way to use price to book. You can not only look at it, right, if it's a bank using one, or comparing them to some of their competitors if it's not a bank and seeing where they fall, but you can also compare them to their self and see where they've fallen over the last year or so, right? So it would have been better if you were buying them back over here last year in September of 2023 at a 3.58 price to book. That would have been a cheaper valuation. Same thing here in June, 3.8 would have been cheaper, and March 3.54 would have been cheaper than where they currently sit. And they've been a little higher than where they currently sit as well. So they were more expensive back in December, and they were more expensive back in March. So according to price to book, they're a little on the high side, even compared to themselves. Now we're going to jump down and look at free cash flow. And we want growing free cash flow because typically if a company has growing free cash flow, they have growing dividends to match over time. Going back to 2021, here you can see $1.2 billion in free cash flow. 2022, a drop down to $1 billion. 2023, huge jump up to $18 billion, and so far trailing 12 months we're sitting at $7 billion. Now you do see growing free cash flow overall, but it's up and down, and I'm not yet going to call it growing free cash flow. I'm going to actually say that they're a little spotty here, though you can adjust. If you look at 2022, even though it looks like there was a bit of a drop here, you can account for that in the repurchase of their share. They are repurchasing their own shares pretty significantly, and this huge jump up in 2023, if they did continue that here in 2024, we'll just have to wait and see what their numbers come out with. Then I would say growing free cash flow. But so far, I'm not willing to say that quite yet. You could if you wanted to. If you wanted to call it growing free cash flow, I wouldn't really argue with you too much. Now we're going to jump over to stockanalysis.com. I am not affiliated with stockanalysis.com or Yahoo Finance. They're just two sources I go to for information, and I always recommend you go to more than one source for information so you can make sure that it is accurate and up to date. Now they have 14 stock analysts that have taken a look at this. They call a consensus buy. They have a low estimate of $70. It currently sits lower than their lowest estimate, so that would be a 3.81% increase in their price. Average estimate of $79.29, which would be a 17.59% increase. And if it happened to hit their high of $90, that would be a 33.47% increase. All the while, you could collect that, just over 1% dividend yield. Now we're going to jump into the statistics here and look at return on equity and return on invested capital, see how well this company is investing its capital back into itself. I like 10% or better for these metrics. Return on equity here sitting at 11%. Good there. Return on invested capital not so good at 4.94%, so no check here. It's all or nothing, right? I don't split those up. Maybe I should split those up and go ROE and ROIC, but for right now I have them combined. EPS growth, I like 5% or better forecasted over the next 5 years. They're smoking high at 19.37, and their revenue growth is forecasted at 9.09. Good numbers overall. It's really just the price per share that is elevated in my opinion. Now, they are a quarterly payer, payout ratio in the 40s, 41.84%. They do have nice dividend growth, 6.38%. This says 2 years of dividend growth, but actually, whenever I look at it, it looks like it's been frozen since February of 2023. So I don't know unless they're going to grow it here. We're gonna go with the 2 years of dividend growth. They were back here in 2021 at 18 cents. February 2022, they were at 20 cents. They raised it up February 2023 to 25 cents, and it's been at 25 cents for the last, over a year now. So they have to continue what they're calling dividend growth over the last couple of years. They need to raise it, which typically they raise it in February, so they didn't do it there. So maybe their next payout, they're going to raise it. I have to watch for that coming up here in the future. All right, now let's jump back over to the screener here and wrap this one up a bit. So we started with understand the business. We got a check there. Growing free cash flow last 4 years. I'm not going to argue with you. If you want to put a check there, go ahead and put a check there. I did not. Growing dividend, I put a check there, and I'm just forecasting that they're going to raise it before the end of the year, right? They haven't raised it since February of the last year, so I wouldn't argue with you if you didn't put a check there. So if you wanted to swap this one up here and not put one there, that's fine. If you wanted to put one in both spots, that's fine. Dividend payout ratio is under 75%. Check there. Check valuation based on dividend yield theory. Dividend yield theory actually says they're slightly overvalued. It is not within 15% of a 52-week low. Return on invested capital was good. Return on equity was good. Return on invested capital was not, so no check there. Earnings per share growth was over 5%. And price to book actually says they're potentially overvalued as well because they are well over 1. They're in the 4 range, so no check there. 1, 2, 3, 4. Even if you were to give them growing free cash flow, that would be 5 of 8. Which this being a financial company does not meet the 6 of 9. This will not make it onto my watch list, though it is one worth watching. Again, really the valuation is the one to watch here because if they brought down their valuation within 15% of a 52-week low and you say that they have growing free cash flow, then they would meet it. But for right now, it's not going on my watch list. Let me know what you think in the comment section down below. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a company like Schwab's you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section down below, and I'll work it in the rotation. Again, really help me out. Thank you to all of you who have subscribed out there. Over 1,000 subscribers. Really excited to see the growth of the channel. And if you have not done so, hit that subscribe button. Join us on this journey to financial freedom. Join the best in interest community and make sure that notification bell is clicked. It really does help a small YouTube channel like mine grow. And the channel is growing because of people like you. Really do appreciate that. So this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for tuning in, and we'll see you in the next one. I'm not a financial advisor. You can read the rest of this. It's getting a little long, but I'm not a financial advisor. Don't blindly trust anyone on YouTube. We are not experts, and if we are experts, we should be telling you we're experts, but I am not one. So don't just blindly trust me or anyone else on YouTube. Do your own due diligence. Do your own research. And if you need to go get with the expert, go find an expert.